Hi, I'm Rick Geiler, President of Silverside Insurance Marketing, and this is your Power 3 product review. Today I have in-house Jeremy Verizer, the Regional Marketing Director with One America. They've been a long-time leader in asset-based care, and today he's going to tell us a little bit about their new product, which is indexed annuity with a care rider. Thanks for being with me, Jeremy.
Hey, thanks, Rick. Appreciate it.
Okay, you guys have just rolled this out here this fall. It's along the lines of the asset-based annuities and life products you've had out for quite some time, but this one has index crediting. Tell us a little bit about how that's going to work and how that's going to show some bottom line benefits.
Sure, Rick. I mean, essentially, it is the first and only Pension Protection Act compliant annuity, which essentially that means we're taking the benefits from a PPA, Pension Protection Act, which is the 7702B section of the tax code, allowing for all gains as long as this is funded from a non-qualified annuity or non-qualified source in general, to come out tax-free for any qualifying type of care. So that can be in-home, assisted living, hospice, nursing home, and then tying it to an index. So in an interest rate environment that's low like we're in currently, having the ability to have certain caps or participation rates, many find much more attractive than a low fixed rate.
Okay, so that's particularly key here is the source of funds, and you can use qualified or non-qualified, but particularly if the funds are non-qualified, the taxability of the funds going in won't have any effect on the taxability of the benefits coming out, correct?
Correct. So in other words, regardless of what that cost basis may be, what that initial premium was funding that old and non-qualified annuity, it doesn't matter how much gain is in that policy. When it is paid out and meets the Pension Protection Act payout for these care benefits, all of that gain is waived and comes out tax-free.
Okay, tell us a little bit about how that's paid out. What are the payout options?
Sure. In order to be HIPAA compliant, if you will, because the section of the Pension Protection Act that we discussed earlier really is just an amendment to the HIPAA tax code, one can either be unable to perform 2 of 6 activities of daily living, or have severe cognitive impairment that deems they need supervision, which is very standard in the long-term care industry.
Okay, and then the benefits will be paid out over what period, and a little bit, we don't have time to get into all the math, but a little bit on how the amount would be determined.
Sure. So with many things that we have here at One America, really you have what's called a base policy, which in this example would be the indexed annuity itself, and then you have the option to purchase continued benefits beyond that, which can be either double, triple the amount you initially invest, or a lifetime unlimited benefit, which is very unique. So the base policy, the annuity itself, if you will, has some bonus factors that will be given to the client at the time that they file claim. And then if it's a single policy, that will pay out over 24 months. If it's a joint, that will pay out over 30 months. And then your riders extend your benefits again up to a lifetime behind that.
If somebody's interested in learning more or getting started with your single premium life, how would they go about that?
Sure. Well, there's a variety of resources that we have to put in your hands to help, I guess, further the sales process with the client. So I know you and your crew are well versed and can help folks with their first couple cases. So the best thing really would be to contact Silverside with a potential case and go from there.
I want to thank Jeremy from One America for sharing all these great product ideas with us today. Thanks for that information. You can follow up with us by giving us a call at 480-998-1286 or take a look at our website, silversideinsurance.com.